is easy, may it be in a career or even in the use of non-conventional fuels. This sunrise sector requires a further boost, and increased investments are a necessity for that. To talk about this topic, we have amongst us stalwarts from the world of finance and senior policymakers from the Government of Maharashtra, the Government of Delhi, and the NITI Aayog. May I now invite on stage Mr. Darshan Shah, Vice President, Merisis Advisors, Mr. Randheer Singh, Senior Specialist, NITI Aayog, Mr. Shirish, Sinha, Director, CIFF, Mr. Uday Khemka, Vice Chairman, Sun Group, Mr. Ashish Kundra, Principal Secretary-cum-Commissioner Transport, Government of NCT, Delhi, Mr. Baldev Singh, Additional Chief Secretary of Industries, Government of Maharashtra, and our moderator for the panel discussion, Mr. Clay Stranger, Managing Director, RMI. Mr. Stranger, over to you. Thanks.
Well, good afternoon, everyone. I'm Clay Stranger, Managing Director with RMI. And actually, this is the first day I've been back in India since March of 2020. It's very great to be back in India, particularly great to be back in Pune. Thank you for having us. And it's my pleasure to moderate this panel on enabling investment in the future of mobility in Maharashtra and Pan-India. My intentions for the panel to explore opportunities to boost investment in the clean mobility transition of Maharashtra in support of the state's climate action goals. And in reality, investment means many different things, and we actually have really a whole ecosystem of public, private, and civil society actors on stage. So I think we'll benefit from seeing through the various lenses of the interpretation of both the challenges and opportunities for enhanced investment in the sector. What we're seeing, I think what we're beginning to see in India and in Maharashtra, is the emergence of a positive ambition loop. And what I mean by that is smart government policies, bold private sector action begin to reinforce each other and create irreversible momentum towards a certain direction. Each stakeholder group has a role to play in that, and so let's explore, if we can, what are some of the forces, what are some of the factors that can actually add momentum to that ambition loop and continue the cycle of bold policies and leadership from the private sector starting to create this ambition loop. So first off, allow me to introduce our distinguished panelists. Mr. Baldev Singh, Additional Chief Secretary, Industries, Government of Maharashtra. Thank you for joining us. Mr. Randheer Singh, Director of E-Mobility and the Advanced Chemistry Cell Program, NITI Aayog. Thank you for joining us. Mr. Uday Khemka, Vice Chairman, Sun Group. Thank you. Mr. Ashish Kundra, Principal Secretary-cum-Commissioner Transport, Government of Delhi. Thank you for joining us. Mr. Darshan Shah, Vice President, Investment Banking, Merisis Advisors. Thank you. And Mr. Shirish Sinha, Acting Executive Director, India, for Children's Investment Fund Foundation. Welcome. I've noticed 45 minutes flies by, so let's jump right in if we could. And Mr. Singh, the first question is for you. Maharashtra is one of the leading auto manufacturing hubs in the country, and you're offering some of the best possible incentives, D+ category, to support and accelerate manufacturing of EVs and components in the state, and to attract significant investment. Would you please open the conversation today by sharing where are you seeing momentum on this topic within the state?
Good morning, ladies and gentlemen. It's a pleasure to welcome you all to Maharashtra and do participate in this alternative fuel conclave. Maharashtra has been very proactive and has one of the best ecosystem for setting up the EV sector industry here. In fact, we had the EV policy in 2018 itself, which dealt with the supply side of the electric vehicles. Recently, we have, keeping in view the what is happening at the international level, we have revised and brought out a new electric vehicle policy and the various incentive which one might be looking at we provide in that. You can categorize the Maharashtra policy into three parts. One, which is dealing with the demand side, where the consumers who are buying the electric vehicles or anywhere related with the demand side, they get the incentive, whether it's two-wheeler, whether it's three-wheeler, whether it's four-wheeler. Then on the infrastructure side, where we are trying to bring the best recharging infrastructure in the state, we have offered a lot of incentives for the development of the infrastructure. We have amended our various legislation to make them compliant and to provide the opportunities to the potential investor who want to come and invest in Maharashtra, including the amendments in the various town planning provisions, which provide for the recharging stations even in the residential societies and in the city areas, which are very congested, like the metro cities of Mumbai. We have offered various incentives in that. Then the third side is the supply side, where the potential investor who want to set up their manufacturing facilities in Maharashtra. We have offered all kind of incentives dealing with the setting up of the industry here. We have declared entire Maharashtra as a D+ zone for providing the incentives in the fixed capital investment of the potential investors. We offer them 100% reimbursement in that. And we have also reduced the investment limits to qualify for the mega projects from 250 crores to 100 crores, so that those who want to come and take advantage of that, they get all the benefit. We offer you the stamp duty exemption, we offer you the electricity duty exemption, and we offer you the best connectivity which you can look for to set up an industry here. We have the availability of the skilled manpower within the state, so you don't need to look outside anywhere. So dealing all three aspects of the demand, the infra development and the supply side, we have brought the policy framework which is already put in place, and we have dealing with whatever new investments are coming to provide them all these benefits. In addition, we are also offering the land availability, as you are aware. MIDC of Maharashtra is one of the big organization which has the largest land bank in the Maharashtra. And wherever you want to set up the industry, the land availability is there, the capital subsidy on land is there. So we provide you all the conducive atmosphere for setting up the industry in Maharashtra. Thank you.
Terrific. Thank you so much for that overview, and congratulations on the progress that you're making. I'd now like to turn to Mr. Ashish Kundra, and sticking with sort of the subnational leadership, Delhi is leading on demand creation for electric vehicles through both fiscal and non-fiscal measures. You've made extraordinary progress in a reasonably short amount of time. Can you give us an overview on what progress you're seeing and what lessons are being learned in Delhi?
Thank you. I think Delhi started off with a policy which offered tax breaks, which offered purchase incentives, and I think it was replicated in several other states. And we are seeing some very, very positive and reassuring results. If we look at the numbers, last quarter, sales of electric vehicles in Delhi have been 10%, more than 10% of total sales. In fact, in the month of March, it has almost touched 13%. And if you look at the two-wheeler electric vehicle sales, in 3 months time frame, sales have doubled. So it's a very encouraging sign. Number one, there is a consciousness of cost and of environment. Plus, I think the investments in charging infrastructure, both public and subsidies for private charging infrastructure, have given confidence to people that there is going to be no anxieties around range and other things, and we are slowly moving into that zone. Very recently, I think we have also, I wanted to share, introduced the auto rickshaw, opened up that space for electric vehicles, and more than 4,000 permits have been issued for electric autos. And going ahead, our next target is public transport, where over the next 1.5 years, I think we'll be inducting about 2,000 buses into our fleet, city fleet.
Thank you so much. Now let's turn to the center. And Mr. Randheer Singh, you've really been at the heart of some of central government's investment, particularly in advanced chemistry cell batteries, but in EVs more broadly. What are you learning, and what progress have you seen around the ACC program and around the broader EV mission?
Thanks, Clay. Advanced chemistry cell program, we have seen the oversubscription, of course, 2.8 times of the total available 50 gigawatt hour capacity. This has already been now awarded to the 4 companies. It's in public domain now. There's another program, which is a niche ACC program, $500 million worth of program, in which the chemistries which are not part of the advanced chemistry cell, in fact, those which don't fit in this particular matrix of the cycle life and the watt hour per kg, those we are going to fit in the niche ACC program. The program is going to focus mainly on 2 things. One thing is the technologies which are right now not at the gigawatt hour level. Those technologies will be promoted. Second, those whose pilot has been done but not yet commercialized. So most of these are not available in India, but there are certain startups which are working on this. I would like to take a name of one big good company is the Log9. They are already working on this. So what I see is not only the investment right now for the companies which have already won the bid, but those who actually bidded for this, the 10 companies. And then there were others who also want to put up their factories. For example, the Suzuki has put up their factory. They didn't even bought the bid. So there are certain other people who are also interested in putting up the cell manufacturing within this country. And of course, the indigenize that. So you know already there are 2 conditions, main milestones. One is within the 2 years of the letter of award. They have to achieve minimum 25% of the localization at cell level. The second one is they have to achieve the 60% of localization within the 5 years, again at the cell level. So these are some of the conditions, and you know the ACC has already been oversubscribed. But over and above this, the one thing which I want to point out may not be specific to EV, but it relates to the full business in our country, is about the compliance burden. Because this is one area wherein we are working. The compliance burden is, you know, it's realistic, and the companies make hue and cry about this, because if you just list the companies on the basis of the available reports recently been published, so the states which have the highest chunk of investment coming in fact, they stand at the top of the compliance burden also. So these are some of the areas wherein not only the central government is looking, but of course the next step is that state government should also look into these, because these are the enablers for doing business in this country. So I thought this is a good forum when we are talking about the investment, that we should bring in the compliance burden part also within this.
Terrific, thank you. I think it's exciting to start to see somewhat coordinated state and central level action to really send a signal to potential investors and companies that both demand exists, but also substantial support also exists in order to make these things happen. Speaking about sort of the scale of investment, I now want to turn to Mr. Shirish Sinha. And you represent in some ways civil society and philanthropy. And it will take tens of billions of dollars of investment to make the transitions in the mobility sector that we're talking about. And yet, philanthropy and civil society operate in some cases on budgets tens of thousands of times smaller than that. How do you think about your role and more broadly philanthropy's role and civil society's role in playing a catalytic role in this transition?
Thank you, Clay, and thank you also to RMI and MCCIA for having us here. To the question that you asked about the role we as philanthropy can play, I always see the role of philanthropy in three terms, or what I say internally as the 3 C's of our work, which is of building coalitions, building complementarity where there is a need for philanthropy to come in, and at times taking some of the work around collaboration that are needed, slightly broader than coalitions that are needed. Now, what are the 3 things that we as philanthropy can really do? One is the kind of work that we do on a very regular basis to strengthen and empower the domestic civil society organizations and think tanks that can actually support the narrative of clean energy transition. Now, and if you take it, for example, the kind of work RMI is currently doing in the transport decarbonization, electric mobility space, the technical support that RMI provides to several of the central government agencies, the ministries and the NITI Aayog, etc., or the work that is happening with the Maharashtra government with terms of the formulation of the EV policy, or with Delhi in terms of the implementation of the EV policy. Now, that's the role that RMI plays in terms of as a technical expert team providing that support. We come behind RMI essentially to support those initiatives, and that's the role I see a lot for philanthropy essentially to do, who are actively working in this space to support think tanks in this area. The second area of work that we clearly see for us to play is, again, to kind of bring catalytic development capital, which can actually influence and inform some of the financial mechanisms that are needed. Now, we don't do much of that work at present here in India, but certainly in Southeast Asia we have done that, where we help create financial mechanisms which would allow early stage developers to come in to invest into clean energy, right? In India, the ecosystem is already evolved, and therefore the role for philanthropy may be less, but we can still play a role in terms of the impact investing ecosystem work that is evolving much faster here. And finally, I think the kind of a technical assistance work, which is very linked to the early work about strengthening the capacities of the think tanks I said. Now, this is essentially, again, a more regular core work that philanthropy really do, and that happens through the civil society or the think tanks in particular, right? So I think I certainly see a role for philanthropy, not just the foreign philanthropies, but also I would encourage really the domestic philanthropy to play that role, because I personally feel a lot of investments that is coming right now in the climate and energy space, when the philanthropic capital is coming, is mostly coming from foreign philanthropies, like us. But I think there is a huge space for domestic philanthropy to play the role, because the direction and the strategic focus of where India's energy transition happening is established now. And this is the space where the domestic philanthropies can work a lot more together with the foreign philanthropies. So I think these to me are the 3 areas where we can actually play a critical role.
Thank you, Shirish. Uday, you play a few different roles, wear a few different hats in this overall system. So maybe a 2-part question to you. First of all, I'd like to hear from your experience with Sun Mobility, and particularly, what's been your experience investing in the clean mobility space? You've been at it for a long time in the country. What lessons would you impart on others who are considering entering into the space from an investment point of view? And if I may, I'm going to pile on there. Second question, somewhat related, but you also act as a climate advisor to the sovereign wealth funds of some 45 countries, I believe, with a focus on e-buses. So pulling out from this global perspective, what role does India have to play? What role do international and forums like the one that you're advising have to play in the overall transition?
Well, thank you very much for that, and to RMI for having me on this very, very distinguished panel. And I'm so impressed by the efforts of Delhi, of Maharashtra, NITI Aayog, and of course CIFF. I'm very privileged to be here. Sun Mobility has been a wonderful journey, and attests, I think, to the fact that it was mentioned earlier today that India is rife with entrepreneurship. And if any sector required entrepreneurship today, it's the e-mobility sector, because unlike some sectors, it's all about creating real innovation, real technology that's customer-centric. And for us at Sun Mobility, cost was everything. How do you get e-mobility to be cheaper than any other form of transportation in this country? So even if you don't have government incentives, you can make it spread very fast. And that innovation allowed us to achieve that, although we feel very grateful for the great support we've got from governments for ourselves and all our competitors and peers. The journey has been one of real technology development. Someone said earlier today that India has been an imitator of technology. We bring technology into India from around the world. That is no longer true. Software, hardware, robotics, AI, data sciences, this country is now full of innovation. We feel proud that we're one of several companies that lead that vanguard. Apart from cost and what innovation can do to make e-mobility cheaper, more convenient, faster. Of course, we've been a champion of battery swapping, which the government has very kindly, both at the level of cities and states like Delhi and Maharashtra, and at the level of the federal government, thanks to NITI Aayog, have been very supportive around. The other real learning has been partnerships and ecosystem. I want to echo your words on partnerships. E-mobility, more than renewable energy, is all about creating an ecosystem of partnership. If any sector requires you to drop your ego and work together, it's this sector more than any other. And I would say technology helps you do that through the sharing of data, through the creation of integration of APIs. There's an enormous potential to bring together the fourth industrial revolution and the green revolution. So those are some comments I'd make from the perspective of Sun Mobility. As Senior Climate Advisor to this group of 45 sovereign wealth funds, I'd make another point. And this is a difficult point for us as a country. Do we want private equity capital or do we want infrastructure capital? If we want private equity capital, then we don't complete that deep thinking about how you put together infrastructure and you leave it to the market to sort itself out. But if you truly want infrastructure capital, and by the way, there's a huge amount of infrastructure capital on the planet today that is desperate for yield, hungry for yield, available for India, which is considered still the sort of blue chip, poster child, the golden child of the emerging markets. We've got to get our contracting right and our counterparty risk right and our regulations right. And to that extent, I think, the area I'm looking at is buses. Globally, we're working with governments all over the world on bus financing, as well as 45 sovereign wealth funds, as well as banks. And I can say that India plays an important role in that. And India's role is not only because India, at the end of the day, is investment grade. It's been incredibly reliable since 1947 in terms of credit and honoring our commitments as a country. And it's at the innovation front end, as we've seen recently with the bus tenders, of the volumes that electric buses, that we can set a model for other parts of the world. But we ourselves are a construction site. We need to complete the great efforts of people like CESL and ESL. They've done a wonderful job working with NITI Aayog and others. And we just need to, I would say, we need to have the courage to do for that sector what we did for renewable energy. Create bankable contracts with great counterparty risk and credit quality. If we can do these things well, we will attract capital much cheaper than private equity capital. If you saw what happened with renewable energy, we went from 22% IRRs to 12% IRRs. Do we need to go through that journey again? Can't we just go straight to infrastructure funding? That's our opportunity as a country today.
You make a compelling case. Thanks for sharing. And I think last but not least, Mr. Darshan Shah, you represent sort of the venture capital lens here. You're in the middle of a lot of deal flow, and we're seeing a tremendous amount of money, close to $1 billion over the last 7 or 8 years flow to e-mobility startups. What are some of the trends you're seeing, and what are some of the challenges that you're noticing companies are finding in raising money for both startups or mature business lines as it relates to e-mobility?
Sure. Thanks, Clay, and thank you, everyone. Good afternoon. So I'll take the first one. I think on the key trends, we've been around for, for the last couple of years. We've been focusing on this EV space, because it's evolving since a time. There have been two major trends that we have been noticing. One is obviously the bunch of capital is now flowing into in OEMs. And OEMs, I mean majorly catering to manufacturing of vehicles, be it two-wheeler, three-wheeler, or four-wheelers. Of that as well, I think a lot of it is basically assisting the last mile logistics and any vehicle which is used for commercial segment. The larger point being that, since COVID, obviously we have seen e-commerce and other kind of deliveries emerging and, going through the roof. And that's where the operators are working really hard with the clients, be it Amazons of the world, how they can reduce cost, how they can give a better earning to the drivers as well, and creating an impact, right? Which is where I think the e-mobility space really comes into the picture. And that's where a lot of investments are going in. The second is, and the most important, and I think I was happy to hear Rautji in the morning focusing on that, which is the infrastructure building piece, right? Be it battery swapping, be it battery charging. That is one of the most and the foremost requirement when we are looking to switch to e-mobility. And that's where the funds are also focusing on. I think we're seeing a lot of global capital, Indian capital flowing into the infrastructure space, building the charging and swapping stations. And this actually also leads to one of the major challenges as well, right? As Mr. Uday pointed out, why do we want 22, 24% IRR capital versus when we can get a 12% IRR? Most of the PE funds, VC funds, venture capital, they prefer asset-light models, right? And EV mobility is all about building assets, right? So if we are looking to switch to e-mobility, there are very limited funds who are ready to invest in this hardcore infrastructure and build a large long-term asset, which will actually require infrastructure capital more than the VC capital. And the second is obviously, there are, if you look at the batteries, the battery technology, right? There are very less select deep tech focused funds, who are really investing in this segment. Today, at a top down, if you say, most investors are not sure which model will work, which chemistry will work. We are very early in the ecosystem today, right? So there are few funds few investors, handful of investors who will probably look to take that plunge and invest in a specific technology and take a view, okay, that this will work. So there's a dearth of capital, but there is very limited tech-focused, high-tech capital which is ready to, do that investment today, and also, versus building the larger infrastructure. So it's an asset-light play, and which is where I would like to see. It's an asset-heavy play, sorry, which is where I would like to see a lot of capital coming in, which we are not seeing today. I think that's a major challenge, today that most companies are facing.
Thanks so much for that perspective. Before we jump into sort of another round of question, I want to ask the whole group, did anyone just hear something from a fellow panelist that they'd like to respond to? Any questions, any comments, any challenges you'd like to make? Good, well please jump in. Let's host this as much as a conversation as possible. The next thing I want to ask, and allow this to continue to build the conversation or to take this as an opportunity to respond to what you've just heard from your fellow panelists, is where, and I think particularly to Maharashtra, if we can ground this question here within the state, where do we see significant untapped potential to unlock new or additional investment in EVs or clean mobility in this state?
The EV sector has a lot of potential. That's one of the reasons that Maharashtra has been very proactive to attract investments on that. And we are working on not only the policy framework, which I mentioned to start with, but to provide you all the enablers to that. Be it the ease of doing business, be it we have a single integrated digital platform where all the issues are addressed. So response from the government agencies, be it MIDC with the industry department or the pollution control department or the environment department is very fast. So that addresses the concerns and issues and also see to it that there are fast track clearances of all the proposals which come to Maharashtra. Then talking about the availability of the kind of ecosystem EV sector potential investor is looking at, you will find the best in Maharashtra, because Maharashtra traditionally has been an auto hub, be it Pune, Chakan area or Aurangabad, where we have Bajaj Auto, we have Skoda, we have Volkswagen, or be it in Nagpur or Nasik, which is again auto ancillary hub. So you not only have a policy framework into place, you have all the enablers, be it in the requirement of the skilled manpower which you have available here. You have the best connectivity, be it the port connectivity, road connectivity or international airports that's available here. And moreover, the role being played by the government of Maharashtra is very proactive. And we are ready to sit with all the potential investment investors to see what are their requirements and to customize the package scheme of incentive which Maharashtra government has to deal with those requisites and those requirements of the investor. So if you look at from the enablers point of view, they are in place, the conducive environment is in place, and we also know that the scope in EV sector, or as my friend was mentioning about the ACC, the advanced chemistry cell, or the semiconductors, or the ECDM sector, that we have realized that these are the sunrise sectors and the state want to attract the investments into these areas, because that will not only provide the benefit to the state and to the people who are working here, but it will also provide the kind of expected environment a potential investment must be looking at. Thank you.
Clay, I must point out two areas actually about which not much has been talked about. One is about the processing industry in clean metals, and the second is the recycling and the reuse. I just want to put some of the facts in where clean energy metals are produced and where clean energy metals are processed. So let's say copper, only 8% in China, but 49% is processed there. In case of nickel, there's nothing, but 35% is processed in China. In case of cobalt, nothing, but 65% is processed in China. Rare earths, which goes into the, the EV motors and all, 60% in China, but 87% is processed there. Then the lithium, only 13%, but 58% is processed. We set up ACC or the niche ACC. But then the raw material and the processing is required anyway. This is one area where, the state EV policies also need to start focusing on. Second part is, in a big way, the recycling and the reuse is going to come in the next 2 to 3 years for sure. And that's why, in fact, we at the NITI is also doing one study along with the UK FCDO and all to find out what is going to be the potential, what are the locations in our country through spatial analysis, and also get in touch with some of the, the biggest recyclers in not only in this country but outside also, because only few are there in our country as of now on both hydro and the pyro side. So these are the two areas which I think from the EV perspective we also need to focus and are definitely going to be the sunrise ones.
Thanks for raising that. I think it may be hard to justify big investments in some people's mind right now prior to big stocks of batteries being retired in the country. But from my point of view, now is exactly the time to make those investments in anticipation of advanced material recovery being a massive industry and a massive opportunity. Thanks, Randheer.
Yeah, I would just say that, India, we need to create tens of millions of jobs in the next 10 years. And what we've heard in the last two comments is all about that. And when you've got a state that is the 13th largest economy on the planet, as an independent state, you've got the scale for that. When you then have the leadership, what do investors care about? They care about the sincerity and consistency of policy and leadership. And I do think both at the federal level in New Delhi and in Maharashtra, you see a tremendous sincerity of focus. And three, when you then put that together with what the two previous speakers have said about the supply chain, there's a huge potential. You ask us as a company, what is your biggest challenge today? It is the supply chain. And that's not just for us, it's for any EV company in this country or around the world today. India is big enough as an economy that we should make most of that supply chain domestically, generating jobs and de-risking the future that we all believe in. Thank you.
Thank you. Mr. Kundra, from a Delhi perspective, a lot of the policy, the EV policy, is designed around demand creation. Can you talk at all about the investment side of things? How are you hoping to bring investment either in services or in production or some combination thereof to the Union Territory?
Yeah, so I think this is one sector where historically we have had the big daddies of auto, industry, whether it is the Bajaj or TVS or companies like these or even multinational companies. But I think the EV space has created a new dynamic where the disruptors are the startups. And these are nimble-footed small companies who have the heft or the bandwidth to use cutting-edge technology, whether it is, all kinds of technology, whether it is application software, AI, or even hardware. They are bringing completely new models of mobility, which were hitherto not even thought about. For example, battery swapping is something which was never even on the horizon. But these companies are the ones which are driving that change. So I think in Delhi we are trying to create, as Mr. Khemka said, there is a need to build partnerships and look at the ecosystem. And in the ecosystem, I think the startup ecosystem for EVs is crucial because it is a very effervescent sector. There is a lot of energy there, but the energy needs to be channelized in the right spaces. So we are trying to partner now with IIT Delhi and to create a forum where we have venture capital funds. We have some Delhi government seed money for startup in areas of priority for us. And also to try and tap into the Indian diaspora, of IIT Delhi alumnus maybe or alumni, who want to contribute, who want to even invest, who are ahead of the curve in terms of technology in this space, in US or other parts of the world, and somehow bring back and contribute in terms of concrete investments in this sector. So we are looking at that as, because we don't have the luxury of that kind of, let's say, land parcels, which maybe a large state like Maharashtra has. But we have a focus on green investments. And in the recent budget, there was an announcement of setting up of an electronic investment park, which is a large part of it is going to be focused around electric mobility. Thank you.
I'd also note, I did read about the provisions taken to attract charging infrastructure investment, and even in a territory without land for sprawling manufacturing plants, the specifics of that offering was such that, as I understand it, some of the most competitive bids came in that India has seen to date for a charging infrastructure installation. So congratulations and thank you for your good work there. Shirish, any thoughts on, from your point of view, like what are those sensitive intervention points in the world that you represent that could help unlock significant more investment?
I think from our experience, and I think most of the civil society or think tanks would say this too, policy certainty is going to be a key driving factor to drive investments in any sector. And we should learn from the renewable energy sector today, right? 7, 8 years back, we were not getting so much of private sector investment in the RE sector. But it's changed the moment the policy certainty at the national level was brought, which enabled investment to come all across this ecosystem, right? That level of certainty is needed. And whether it is at the national policy of for around EV or at the state level, if we can bring that stability, that if, let's say, for example, we are saying 30% vehicles to be registered by 2030 to be electric, let's stick to that, or work towards that and make that clear policy goal and a vision, and see what is therefore required in the entire ecosystem to be created. How do we, I mean, I completely agree with Uday when he said that India needs to address the supply chain. Some of the disruptions that we have seen, even in the PV sector, so solar PV, the supply chain got disrupted for over 2 years, and therefore now we have a separate PLI scheme which is essentially addressing that, to build the domestic manufacturing capacity on solar PV. So I think that level of certainty that is needed will give a real boost across sectors and build the entire ecosystem that's there. We do have the right policies and programs in place. If you really look at the Maharashtra EV Policy, I mean, the whole RMI team was very closely involved. What is really needed is a clear direction that this policy would be implemented in letter and spirit so that the ecosystem is built, right? As the largest manufacturing state in the country, the players are there. Money is there, as they said, for infrastructure financing, there's enough investment available, capital is available. Let's give the policy certainty. That's my word to that. Thanks.
Thank you very much. And Darshan, you mentioned in your earlier comments that venture capital prefers asset-light, or in some cases, asset-less businesses. Unfortunately, software can't alone move all the goods and services and people that we need around the country or the world. How do we bridge that gap? What type of confidence do investors need to actually bet forward on hardware and technology?
Yeah, so I think that thought is evolving and slowly changing as well. There is enough and more importance given to how do you control quality, how do you control the technology which is sitting on the hardware as well. So we are seeing investors coming in and investing in hardware plays as well, but obviously technology is a core to everything, right? The most important for the investors is the data, but sitting on top of hardware, right? So it's important to get some checks done on the hardware and see what kind of technology has been built on top of that. But also there are different kinds of investors, I mean, we have, and that's actually where, advisors like us also come in, right? We open a separate platform of investors globally who are, actually looking at such plays and looking to actually invest the money in such business models, right? And obviously, once we move forward, there is enough and more conviction in the space, we will see investments flowing in from domestic funds as well, or the traditional venture capital private equity funds on a hardware plus software play. But today, I think there are, as I think one of our colleagues mentioned, there's enough and more capital lying globally, ready to be invested in Indian e-mobility space, and that's where that's what we get on the table for our clients.
Thanks so much. Time flies, so just one closing question that I'd like to pose to the whole group for your reflection. Imagine it's 5 years from now, we're at the 5th annual Alternative Fuel Conclave here in Pune. What is one sign or indicator in the market that we're seeing that shows that we're on track from an investment point of view to get where we need to as it relates to clean mobility? And Shirish, I'm going to put you on the spot and come down the line.
So 5 years from now, what do we see, right? Difficult one, but I probably see that a big shift comes in the certain segments where we're already seeing key trends, the two-wheelers and three-wheelers, but I would say the biggest trend would come in the electric bus scheme for public transport. That's where the city moves mostly on, at least the bigger cities, at least to start with.
In my mind, I think there are two broad things which I see, and I think one of it, Uday pointed out, lithium-ion battery recycling and reuse. Obviously, we are seeing one section of, one load of the batteries already coming in, but I think 3-4 years down the line, 5 years down the line, we'll see the enormous amount of work that is done today and the batteries that are being built, used in these 2- and 3-wheelers, then coming for the second life reuse, right? I think that's where a larger play will eventually happen in the next few years.
Yeah, I think from my standpoint, probably battery technology is the crucial determinant, because that's an area which is still evolving. And if we have to compare, it's just like the mobile phone revolution, you know, the size of the mobile phone, miniaturization, everything. It was kind of a factor, crucial factor was the battery technology. And same goes for EVs. I mean, rest of the things are not all that difficult, but once you get the battery chemistries right, the ingredients right, then I think investments will stabilize and ramp up.
The largest companies in this country see this as their mainstream business. Yields have collapsed, returns are low, everyone's driving an EV, and all we're talking about in this forum is how to make sure it doesn't come from coal-fired power.
Maybe the cost which are right now world around for the cells, we might see the localized cells in our country. That is one thing which we have to see. If we see historically, it takes time for technology and things to arrive in India, but the pace of adoption is always steep. And the same thing is going to happen with respect to the EVs also. So the next 5 years are very crucial. We may adopt 2%, 3%, 4%, but there would be sudden jump to 30%. That EV 38, 30 hours we are the signatory of that, and I think that would be achieved.
5 years from now, we see the EV sector maturing and addressing many of our concerns, be it regarding the disposal and the recycle part of it, or be it the life of the batteries. We are talking about that maturing. And also you will see probably 30 to 40% vehicles on the road which will be EV, and it will stabilize the sector and the supply chain. That's what we look at from it. And we probably, Maharashtra will be the leader in that. Thank you.
Well, it's been an honor and a pleasure to learn from this panel. Thank you for having me. May we realize all of those visions 5 years from now. I think we'll be in pretty good shape. So please join me in giving a big round of applause to the panelists. Thanks so much for your time and attention.